It's common for car buyers to put most of their effort into finding the perfect car and only think about financing at the end of the journey. While getting the right vehicle is critically important, figuring out how to pay for it and getting a car loan are also critical parts of the car buying process. Figuring out your budget and financing can help you guys how car must can afford, helping you narrow your choice. Few buyers can afford to pay cash for the full price of new or used or car purchase. Instead, you will need to get an auto loan to cover either the entire cost of the vehicle or the substitution part of it. Getting a better finance deal can force you to pay extra each month or your credit history of years. Your loan payment is just one piece of the cost owning a car. It needs to fit you into budget while at the same time paying at the balance as quickly as possible. Do your homework and make sure it's not just about hey, I want to pay $3,000 a month, says Erin Kalapsi, Executive Director of Strategic Alliance at Ely Financial. Really make sure that vehicle meets your needs, that you can ensure it that your fuel economy makes sense for you. You can drive the number of miles you need, that it helps the functionality that need you, so that you get the all package
Ring.
and total cost of the ownership experience as opposed to shopping the vehicle payment. Our new car ranking at used car ranking and viewer will help you find the right vehicle, while the following step will guide you strong getting a great deal on your loan. It's a common for car buyers to put off the thought of financing until they are in a car dealership finishing office. This unfortunately a path to potential financial calamity. A smart car buyer know especially how much vehicle they can afford and have a plan in place to finish their new ride before they think about heading to dealership. You might have the dealer financial, but the dealer does not have offer to bid. They will no initiative to give you more affordable deal. Here are 7 steps to take when financing a new car or used a car. 1. Learn the language of lending. Know all of the financial terms that are likely to be used when you are looking for a car loan. 2. Get your credit score and understand why it matters. Understand what your credit score and why it matters when you are financing a car. 3. Find a good financial deal. Learn where and how to get car financing that you can afford. 4. Apply for a car loan the right way. Learn the steps to apply for a car loan. 5. Look at dealership financial offer. Compare your pre-approved auto loan and an offer from a car dealership. 6. Finalize the deal. Sign the loan paperwork and close the deal. 7. Take this step after you have an auto loan. Learn that happen what you finalize the deal. 1. The point number 1 is learn the language of lending. There are some essential terms that you will want to understand before you begin your auto financial adventure. Here are a few of the most important. Car loan, also auto loan, car financing. A car loan is contract between you and a lender where you agree to provide you with the cash to buy a new car or used car, and you agree will pay the money back over time. Unless you will get a 0%
Ring.
financial yield,
Ring
you will
ring.
have to pay interest each month on the loan balance. That interest will get the specific the loan papers. Some lender will also charge you a loan fee. Until you will completely pay off the loan, the lender will hold the title of the vehicle. Second, Interest also financial charge. Interest is the cost of borrowing the money from the lender. It is the expressed as an interest rate, often called the annual percentage rate or APR. The interest covers the lender cost risks and provides them the profit margin. For several time, auto loan rates higher near historical lows. They have now slowly climbed towards a more beautiful range. The annual percentage rate you pay is affected by a multitude of factors, including some you can control and many you cannot. Your personal credit history, the length of the loan and you're seeking, and even the type of vehicle that you are buying can significantly affect that you will be asked to pay. Different lenders can offer significantly different interest rates for the same vehicle purchase. Car loan term. The car loan term is the length of the auto loan and it is typically expressed as a number of months. Loan term of T60 to 48 months are
Ring,
you once the most
ring,
common
ring.
long. As cars have gotten more expensive, however, loan have term of 6 to 68 months or 7 long are widely available. It's good idea to divide the loan term by 12 so that you can truly understand the number of years that it will take to pay off the vehicle. Longer loan can mean the more risk for lenders, so that typically come with higher interest rate. You generally want to get the shortest loan you can afford. Having a shortened loan can help you to avoid the possibility that you'll be trying to pay off your car at the same time as the car is lead to more costly repair. Principal. The loan principal as the balance of the loan. When you can first take out the financing, it will be the total loan amount. As you make monthly payment, the principal will decline, which you payment a portion will go towards interest and the rest will pay the principal. Down payment. A down payment is an amount of money that you can pay towards the purchase of the car when you initially buy it. It can sum in the form of the cash payment you trade in the boat or you will amount to have the financial bank account of the car, the financial amount of the down payment. For example, you can buy 400 US dollar, maybe one, and pay 10,000 down payment. You have a financial $3,000 back. Monthly
Ring.
payment or car payment. Each month you recall to payment toward the loan principal and interest. Monthly payment will be equal and have a specific due date. Figuring out the monthly payment on a specific loan requires relatively sophisticated math, as you are paying the less bit interest each month as the loan balance declines. Fortunately, you can quickly find an answer by plugging a new number into a car payment calculator. It's circle that you plug the cost of the car plus the total cost of interest when comparing auto loans, focusing on the monthly payment and the number of months you are paying. The interest rate alone would not give you complete the picture of the total cost of vehicle.